Hey, I'm going to teach you about taxes. And today, I'm going to talk about HSA and why it's the trifecta of tax benefits. Looking at this chart, you'll see I'm comparing it to a traditional IRA and a Roth IRA. You have the first column, which is pre-tax, meaning that when you put the money in, you don't pay any taxes on it. It's a tax deduction. Tax deferred growth is the second column. What this means is that as the account grows over time, year after year, you're not paying taxes immediately on that growth. It's just tax deferred. And then the next column is non-taxable withdrawal, which means that when you take the money out finally, are you going to pay taxes on it or not? So non-taxable withdrawal means that you're not going to pay any taxes on it. So comparing it to a traditional IRA, you get a tax deduction when you put the money in, check. It's tax deferred growth, meaning that anytime the account is growing over time, you're not paying taxes yet. But when you take the money out, you will pay taxes on all the withdrawals. For a Roth IRA, you don't pay, or you don't get any tax deductions immediately, but you do get the tax deferred growth. So any earnings inside that account will not be taxable. And when you take the money out of the Roth IRA account, you're not going to pay any taxes at all. With an HSA, any money you put inside the HSA, you get a tax deduction right away. And if you invest in funds within the HSA, all the earnings are non-taxable as long as you keep the funds in there. And when you take the money out, it's non-taxable as long as you use it for health care.